SwissBorg is the official partner of my channel where you can buy, sell, hold, and more importantly stake your cryptocurrencies. You can even earn yield on your stablecoins. Sign up with my link and you'll earn up to $100 worth of their native token CHSB just for depositing €50 worth of crypto. SwissBorg. Hello everybody, welcome back. Let's have a look at Bitcoin and traditional markets as we are still basically in Wreck City, completely in Wreck City. So yesterday we found a bit of a bounce yesterday. We'll just call it an inorganic pump because even though the Everything Bounce 2.0 is working out exactly as expected, you know, so we got the top of the Dixie, we got the move on traditional markets, we even got it on oil and gold and all of that lot. Crypto, as we said at the beginning, is a bit of an afterthought and should get carried with the market, but it cannot work in the face of an enormous black swan, which was the FTX situation. So unfortunately for crypto and Bitcoin, it's not the Everything Bounce for the the Everything Bounce 2.0 is now been rebranded as the Everything Bounce Except Crypto 2.0, which is, I suppose, fine to a large extent because this is how we this is what we were looking at in the first place, really. For the last, at least for the last couple of months, we've been introducing Forex to the beginning of these videos, and we've often looked at major indices like Nasdaq and S&P before we even glance at the crypto chart. But now we could safely say to a large extent that they are, in many ways, decoupled, because everything else is working exactly as expected, but crypto has been kicked down the stairs very hard. So let's just quickly have a look at the Nasdaq, which had a 7.5% move yesterday off the back of that reasonably acceptable CPI print, leading everybody in the markets to believe that the next rate hike will be less than 75 basis points, maybe 50, maybe 25, maybe nothing. Who knows? Who knows what they're going to do? To be honest with you, who knows what they're going to do? No one has a clue, but the markets seem to think that they know. Either way, regardless of that CPI, it's all performing as we expected it to, apart from crypto. So when it comes to the next levels of resistances, like I say, this is very much in keeping with a bear market rally. It's very, very much like a bear market rally. Here's your descending triangle for the Nasdaq. The top of that area is 12,200 this week. Next week it'll be less. The week after that it'll be less. More or less moving down by about $100 each week. Now we gave this move on the Dixie a period of 2 to 6 weeks to play out. We're now in week 5, so we've had 1, 2, 3, 4, 5 weeks, and it looks as though we're 3/4 or maybe 2/3 of the way down. So we're so far down 5.5. To the max tune of around 8%, which is the 50 exponential on the weekly, whereas that's where I'm expecting this to bounce from. And so, you know, a lot of people misinterpret what I say. I don't think that the Dixie is going to break down forever and ever after. I just thought it would put in a significant top based around the Forex pairs that we were looking at and a variety of other things that we discussed on the channel. So that's all working fine, but this is most likely going to find a decent bounce around this level, and this bounce could be the one that takes it straight back up to the top. There's not really much in it for the moment. You know, let the move play out and we'll see what everything looks like as and when we get here. And when I mean everything, I don't mean this chart. I mean, we'll be looking at euro, pound, Japanese yen, all of which are playing out exactly as expected. So just a quick look at the S&P, which managed to move 5.5% yesterday. So again, you know, my stocks situation is looking very tasty at the moment. The next level for major resistance is going to be another 3% to a maximum of 4.2%, which is, again, bear market rally situation to the top of this descending trend line. Not really looking for anything much more than that. We are getting very close to those levels right now. So whether or not people front run this, the market could front run these areas today, because it is Friday. I don't know about you, but I like to take profits. I like to bank profits, especially if I've made decent profits within the week. And it has been a decent week, despite the crypto scenario. It has been a decent week so far, and in fact, it's been a decent month since we, like I say, told you about the Everything Bounce. It's just unfortunate that crypto hasn't done it. So now we can turn our attention to crypto, which is still in a bit of a crap area. We've got this major pivot area, I would say, is what we should call it. 18,500, 18,600 thereabouts. It's basically the breakdown zone. So we bounced from the bottom of this descending trend, which previously was our resistance, flipped to support just for a very brief moment in time, But that's the breakdown zone from this candle body. If we look back in time, just very briefly over the summer, basically since the everything bounce, well, the original everything bounce, where we said it was around these levels, it's around these levels, really, yeah. We've come back to that level, and now we're below it. So obviously we're going to treat this as a major area of resistance. But we could think about it as well as a pivot. So if we were to break above here, close above here, we have every chance of actually, surprisingly, reclaiming everything that's lost. But for the moment, we aren't looking to do that. For the moment, we are below it, and we haven't even come back up to test it. So it was a decent move yesterday, mostly thanks to the CPI. But outside of that CPI thing, Bitcoin is still in a significant downtrend, and it's going to take a bit of time to recover from that FTX. It's still only been a few days since it actually happened, and with that, the chart really does need to reset itself. Because just like when we see giant big pumping moves that take place, they go, certain things, certain altcoins, we look at them on live streams a lot, and something's pumped, 100% in a day. I say, look, as good as that is, it's kind of broken the chart to an extent. So to try and apply TA to something like that is going to be difficult, because there's things outside of the chart which generated that move, whether it's a big tear up move to the top or a big crashing move down to the bottom. The move was generated outside of the chart for reasons that weren't particularly present on the chart. And so with that, the chart needs to start to become a little bit more reliable, allow some moves of its own to take place until it basically finds a balance and we can start to treat the chart appropriately. But it is relatively simple in terms of support stroke resistance. The main thing would be 18,005, 18,006. A reclaim of that would likely start an uptrend back up to the areas that we've lost. But until we see that, we should expect this area to be the top of the current range that we are finding ourselves in. And again, we can find ourselves going down to much lower zones on here, and this 18,500 could just be the new top on this right now. So it is kind of that simple. But again, staring back at it, looking back at it, it is what it is. There's nothing that can be done about it. We have to allow for the chart to mature since we've broken down into a new range, and whether we reclaim the previous range, because again it was a black swan event, maybe we do get a decent spring that takes us back up to above those levels and beyond. We do have bullish divergence on the weekly that'll be sealed in on Sunday night on this chart here, because this is a 24-hour spot chart, but we're also going to have bullish divergence on the money flow index. So these are all things that would help us discover and navigate a potentially I'd say a significant low. But as far as finding that support down here around about, what was it, 15,500 or thereabouts, wherever we came down to recently, that is, I suppose, an intermediate random kind of zone. I wouldn't really say that is a historical area on the chart that requires a great deal of significance. Maybe a little higher than that would be reasonable, 16,000. Maybe a little lower than that, maybe 14,000, but not 15,500. It doesn't make much sense to me. So I think we should sit and allow for this chart to tell us what it really wants to do next, whether it pivots above 18,005 or 6, or continues down to a bit more of a solid range low of like maybe 14,000 with an eye, specifically a very keen eye, as we approach 12. So all eyes on the prize. Like I say, we still got a little bit more upside left in traditional markets over the coming weeks, with Dixie obviously working out exactly as we wanted it to. It's just unfortunate. Black swans do happen, and with black swans can come the ultimate knife catch for the hindsight traders, or can come wrecked city for those people as well, which is why they call it a knife catch. Personally, I'm going to let the dust settle on that one. I've not picked up any of the alts that I'm looking to buy when we hit an extreme low. As we've now broken down from this range on Bitcoin, I am really quite keen to see it continue to go down further, so I can pick up all the alts that I've said that I would, back in the summer, barring FTT. this time round. And a quick note on all of this, I still believe in the exchange token scenario. Yeah, exchange tokens have always been the most bullish coins to hold for the long term. Now the problem is that we need to be sure of the exchanges that we're buying into. So yeah, and there is a problem with that theory, isn't there now? So, but I still stand by it. Historically, exchange tokens have always worked out extremely well. Why wouldn't they? This is the only problem that we're going to face within that theory. And again, like I say, maybe buying FTT, down at the extreme lows is probably still an okay idea. But I think all trust is lost with that exchange. Whoops. And with that comes probably an exodus, a migration from FTT onto the other exchanges. So there is still reason to be pretty bullish on the other exchanges. I'm not entirely sure who is going to take the market share. I imagine Binance will take a decent portion, but we're talking US customers as well here now, so I don't know too much about who's the next biggest in the US. Might be Kraken, I don't know, it might just be someone simple like Coinbase, but there is a hole that needs to be filled there now from FTX, and we'll see over the coming months really who's going to fill that void. Anyway, I'll leave it with you there. But yeah, pivot 18,500. Until we see that, I would expect new lows to form on Bitcoin and gradually sort of moving down as this bear market continues, and also like we don't know the exact repercussions of what's going to happen as a result of the FTT insolvency, FTX insolvency is the same thing, isn't it? Really, we don't really know the what's going to happen next, who's gone bust, who's going to go insolvent next as a result of the teat to which they've been suckling on all this time running dry. Right, I'll leave it with you there. Join me on the live stream tonight, Patreon members. Links in the description. Otherwise, have a nice evening, have a nice day, and enjoy your weekend. Take it easy.